So let's fast forward a little bit here in Johnny's Lemonade Stand business future. We're going to go towards year number 7. And let's say Johnny, up to this point, has been reinvesting all of the profits of his business back into the business. And let's say he now has 8 lemonade stands across town. His earnings have continued to grow as he's been able to reinvest at a really high rate of return. However, now he's in year number 7. The market is pretty saturated with lemonade. He's got another competitor, and the opportunities for reinvesting back into his business just are not as good as they once were. So now let's take a look at what his earnings look like for year number 7. So the business makes a profit of $500,000. If we take this $500,000 and divide it by the number of shares outstanding, we come up with a $2,500 earnings per share. And this represents what each share is entitled to of this profit. So Johnny has 50% of the business, or 100 shares. So he would be entitled to 100 shares times $2,500 in earnings per share. That represents his total earnings for what he owns. Matt and Ben would own smaller portions, but this metric, this earnings per share metric, is one of the keys when you look at any stock or collection of stocks. What is the price you're paying compared to the earnings each one of those shares is generating for you? The second part of this equation is the dividend. So let's say Johnny's investment opportunities are lower. He decides that he needs 50% of the money needs to go back into the business. And the other 50%, or about $250,000, is going to be available to pay out to his shareholders as a dividend. So they are going to all get some money deposited into their investment accounts, depending on how many shares they own. So Johnny, he owns 100 shares. So he is going to get $1,250 per share, and that's going to be a total of $125,000 deposited to his investment account. Matt owns 90 shares, so we multiply 90 by 1,250. He gets $112,500. Ben has 10 shares at 1,250. He will get $12,500. So when you own a company that pays a dividend, so Apple, Microsoft, most big companies that are profitable will pay some kind of dividend. You will get money deposited into your investment account each and every quarter, or sometimes semi-annually, depending on the company. Like Disney pays semi-annually, but they share a portion of their profit with you as the owner.